eliminate or reduce what you owe to the IRS.
Generous programs are now available that can give you a fresh start.
Our passion is taxes and helping individuals fix their IRS problems.
We have over 1,000 5-star reviews on Google and an A+ with the Better Business Bureau.
You don't need to be afraid of the IRS any longer. End your tax nightmare today by visiting us online at TRA.com or call
800-583-5795. That's 800-583-5795.
Tax Relief Advocates. Real solutions for real people.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
Individuals and businesses with tax problems, listen carefully. If you owe over $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accounts, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-466-9625. U.S. Tax Shield, 800-466-9625.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age. for Social Security, whereas 65 is the eligibility age for Medicare. And then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, they haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. Happy Tuesday out there. Hope everyone had a nice long weekend. For those who got off the Martin Luther King Day holiday, we kick things off this week with a increasing tensions really across the earnings, not from many tech companies, but Netflix reporting. We also will hear from Procter & Gamble, Johnson & Johnson, and Davos kicks off as well, which always gets some coverage in financial circles. It's Mike, Paul, and Tucker with you on a Tuesday, but definitively the top story of the day driving markets this morning happens to be increased tensions with Greenland. And so I'll quote the president on a couple of items from over the weekend as we kick the show off here. When speaking about strategic control, quote, "The world is not secure unless we have complete and total control of Greenland." Went on to say on Saturday, I may put a tariff on countries if they don't go along with Greenland because we need Greenland for national security. So what we have happening this morning is, once again, a bunch of focus on tariffs, the president's ability to impose them, markets reacting to them. And that's where we're going to kick things off here, Paul, is a revisit to April of 2025 in a lot of ways, quite frankly, which in some ways we should be pretty well versed on this at this stage and understand the implications of where these tariffs could go, where a trade war with Europe could go. But I think we all might need a bit of a refresher lesson. In early trading, if you're just tuning in to what's going on in markets, the S&P is off about 100 points, close to 1.5%. The NASDAQ off 1.7%. The U.S. dollar is moving lower against the euro, against the Japanese yen, and you've got yields moving up. So not exactly an unknown playbook here, because like I said, this is falling in line to, a microcosm of what we saw last April, but with some key differences as well. So Paul, any thoughts on what we're seeing from markets so far this morning in reaction to the announcements from the weekend?
Yeah, certainly reminiscent, Mike, April of last year, no question about that. I do feel as if that some of the volatility that we're seeing, I mean, there is a sell-off to be clear this morning, but perhaps markets have gotten a little bit more immune to this type of back and forth between the United States and some of the economic geopolitical tensions that have stoked up over the last year and a half or so. In terms of unpacking this whole situation with Greenland from an economic standpoint, I mean, I did have flashbacks back to April and last year when I'm reading up on all the different levers that the European Union could pull in terms of retaliatory tariffs, and that just felt a very similar vintage to last year, where there's talks about, hey, could they go after, Harley Davidson's, bourbons, farm goods in terms of things that they would tax back for us, but ultimately this is something that I have learned to be a little bit more cautious on getting too deep into the weeds on the economic tariff retaliatory side of things before we really see action in place. And that's something that I personally fell victim to last year, is making all of these suppositions as to what is going to occur, but better to take things as they come is what I'm at least trying to do here.
I tend to agree with you, Paul. And, furthermore, I don't think either of us are the foremost experts on the strategic national importance of Greenland to our defense scenarios or to the future of mineral rights and things along those lines. But we can certainly talk through what the trade relationship between the United States and Europe looks like. And the most recent data I could pull was from 2024, where across the European Union, the United States traded goods and services with the EU to the tune of between $1.5 and $1.7 trillion. So that includes both goods and services. Tougher to tariff a service, obviously, than it is a good. But nonetheless, that's the degree of trade between that bloc and the United States. And to give some context to that, obviously the last decade has been, when it comes to trade, much more defined by our relationship with China. And we've seen the strategic importance of things like rare earth materials and magnets coming out of China and just the massive manufacturing capability that they have there. But to put this in context, $1.5 to $1.7 trillion in trade between the U.S. and EU. Total trade between U.S. and China, most recently around $660 billion. So we're talking 2 to 3x in terms of total trade between these two blocs that is conducted. Obviously, anything that disrupts that in the way of tariffs or other retaliatory measures, we've seen the European Union, for instance, threaten getting creative with how they retaliate, whether it's against big American tech companies, as we've seen for the last decade. Suffice to say, guessing at what's going to happen next on all this, I don't think would be a useful exercise. However, understanding the context of how big the trade is and how significant the value of both investment between these two blocks and trade between them could get in the way of things is important. I want to get back to April of 2025, though, Paul, because there were some important lessons there. And, it was really specifically Liberation Day, April 2nd, when things started going pretty wild. And if you'll recall, when we got like a week out from that whole event, it turns out it wasn't really the 20% equity market dip that you saw, which you did see. You saw a 20% drop in equities in April of 2025. It turned out that really wasn't the biggest thing that reshaped opinions within the White House of what should be done here, but rather the movements in the bond markets. Yes. We were talking about the wild yield changes that we saw, single day moves on the 10-year Treasury of, 14, nearly 20 basis points at certain points in time. So April 2nd, it looks like the change in the 10-year Treasury went down by 16 bips. By April 7th, it had bounced back 14 basis points as investors, flocked to safety and drove those yields downward. And frankly, nearly probably broke a few hedge funds and pretty critical parts of the overall market. And from commentary within the White House, it was seemingly those actions that really caused the White House to divert and change plans when it came to their proposed tariffs. This is admittedly different, right? This is, a set of tariffs that are not really specifically designed to protect American industry or, reshape domestic policy, but rather, international policy. So I won't claim to say that it works out in the same way. But we are seeing echoes of the same thing. The 30-year Treasury yield this morning jumped by 9 basis points as people poured into other assets. You have the U.S. 10-year yield jumping up 5 basis points as we speak right now, counteracting some of what the president has done to lower interest rates for things like mortgages. And I don't know if that will be prolonged. It's really hard to say where this thing goes. But, obviously, the more it escalates, the more there is concern about how much foreigners are willing to pour into U.S. Treasury markets and what that could do to yields. And so interesting what's happening in equities. That's what will be reported on. I'm personally a little bit more interested to hear what happens in bond markets over the coming weeks as we learn more about this intense disagreement between some of the United States and some of our closest allies like France.
That was the first thing that I looked at this morning, Mike, was immediately to the bond markets, because I feel as if they really showed their muscle and their importance, like you had mentioned back in April. And just interesting to note, as President Trump is now set to have some more commentary on the housing market front. The U.S. 10-year Treasury, for listeners out there, is the critical benchmark that all mortgages, for the most part, are really priced off of. And you were alluding to it just a moment ago. It's up to 4.28%. But it's so interesting with financial markets how some geopolitical issues can counteract some of the focus on trying to bring down interest rates on that U.S. 10-year Treasury, because it is very different than what we talk about with the Federal Reserve on the shorter end of the curve. When they're controlling interest rate policy, it's something that can be a lot more targeted, and there's a lot more control that can be asserted there. When you're talking about the U.S. 10-year Treasury, things like what we're talking about this morning can sort of shape the way that the interest rate changes, and it's harder to control. So interesting kind of ripple effects there.
Again, reaction from equities and bonds relatively muted. A 5 basis point move on bonds is not an immense shift, but interesting to me here. This is pretty clearly a sell America trade today, right? I mean, we're only 45 minutes into trading, but when you've got bond yields moving up and you've got stocks moving lower, that means one thing: money is flowing out of U.S.-based assets, whether those are bonds or stocks. Not to say that will continue, but pretty clearly the reaction this morning, at least, is a bit of a sell America trade. Let's take a quick break. When we come back, I'm sure the discussion over Greenland and tariffs will be permeating throughout the show as we go on here, but we're going to shift over and talk more a bit about tariffs generally. We very likely could have a Supreme Court ruling any day now when it comes to tariffs. But now that we're over a year away from some of those initial proposed tariffs from 2025, what are we seeing in terms of impacts? Who is paying for them? What are we seeing in terms of employment? That's all next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part: travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Well, as tariff talk continues to heat up, I think it's worth revisiting some of the studies that, frankly, we had just kind of put to the back burner over the course of the last, what would you say, Paul, like 9 months since this has been a real focus of the show?
Definitely.
Yeah, it has been a minute here, but the budget lab at Yale has been doing the real preeminent research on tariff rates, the average effective rate, really tracking down, hey, when a new tariff is announced, how long before it gets implemented, and then what are the exceptions that have been put into play. And one of the other areas that they've studied is, hey, not only what is the average effective tariff rate, but how much of that seemingly is getting passed through to U.S. consumers in the form of higher prices. And this morning, a German, think tank, I think it was, released that their findings show, the Kiel Institute for the World Economy suggests that the impact of tariffs likely to show up over time in the form of higher U.S. consumer prices, but in either case, they view the pass-through rate to Americans to be about 96% of the headline tariffs. And their finding would not be immensely surprising, I don't think, largely stating that, hey, while the tariff rates don't show up immediately because companies try to absorb some of it, they lean on suppliers, they will try to just wait it out and see if the tariffs get canceled or changed in some way, shape, or form. Eventually, they can't quite do that and end up passing it through. Interestingly, the budget lab at Yale, which the last study that I saw on this was from June of last year, so quite a bit outdated. But at that point in time, their pass-through estimates was closer to 61 to 80%. And so, again, I guess where I'm comfortable saying is that somewhere between 60 and 100% of the tariffs will eventually be passed through to consumers. I doubt it'll actually be 100, but the longer a tariff stays in place, the more likely it is, if that product can't be relocated, that production can't be relocated into the United States, that the tariff will eventually pass through to that consumer in the form of higher prices. And more studies are pointing to that. Again, we saw a delay in how long it took, but the longer those tariffs stayed in place, the more got driven home to consumers, which is probably part of why we're having a difficult time getting overall inflation down to the Fed's target of 2%. It is difficult to ultimately achieve that goal when you have these things in place. The other piece of this that I'll point out, though, like many will correctly say, hey, all well and good, Mike, but we had big tariffs in 2025. It didn't crash anything. It did not lead to, in prices going up 5% in the aggregate. It did not lead to massive unemployment. And all of that's true. And my summary of why would be that we settled in on tariff rates that are substantially lower than what we were talking about in April of 2025.
Right.
When people were predicting doom and gloom, we were talking about average effective tariff rates in the 30s.
Right. And I believe we sit close to 13% or so today at the last piece of information that I saw on the effective tariff rate in the United States. I don't think that you had hit the number here from the Kiel Institute for the world economy was 96% of the U.S. tariff costs were being absorbed by consumers. But I do think it is important as we revisit these topics to sort of discuss that what you had mentioned before, Mike. This is on a backdrop of a U.S. economy that just reported 4.3% GDP growth in Q3. That number is going to be finalized, I believe, later this week. But however you want to cut it, it's really was a very strong number in terms of economic growth. Inflation sits at 2.6%. So not the 2% target that we talked about, but far less than I would have estimated, certainly when we were talking back in April and May. And that's partially because the tariffs weren't as high as initially anticipated here. I question any of these estimates here on the 96% or 60%. I just don't know how much data you could really wrap your arms around in terms of looking at those prices, because I do think there was some give and take between foreign suppliers and companies sort of footing the bill. But they are ultimately right. We all know that eventually consumers will pay the brunt of those tariff costs. But on the inflationary
and frankly,
front, I've been
there's
surprised.
so many different ways to measure this too, Paul, right? Like, you have to factor in that, okay, if I am buying a T-shirt that's manufactured in Vietnam and faces a 20% tariff, I may now instead choose to pick a T-shirt manufactured in Cambodia, which faces a different tariff rate. And so all of this you have to factor in, okay, well, what if I substitute where I purchase things from or any of these different factors? So actually measuring what the pass-through is quite difficult, but suffice to say, it's probably most of the tariff gets passed through. Sure. And what portion of that is honestly just not the most meaningful thing. I think if you're worried about markets, reacting to this latest round of tariffs, the reason would be because we're talking about, much bigger tariffs on our single biggest block of trading partners, which would be the European Union. I mentioned this during the first segment, but it dwarfs our trading relationship with China. It's about close to three times the total trade relationship with China. And again, for that reason, however, I don't want to sound as though I'm ringing alarm bells. I think for that reason, it's very unlikely to me that we get into a trade war with the European Union.
Right. And also the other thing that is worth noting on the concern side, though, is you do have a different situation here where this is a strategic move geopolitically by the United States, and the ones of yesteryear of 2025 were more focused on reshaping the way the U.S. economy, sort of its trajectory, and you could just see perhaps a little bit more resolve from some of the EU nations this time around when you're talking about a territory or Greenland. than you would have previously when it came to economic decisions being made.
Yeah, I would agree. Because, frankly, when it comes to trade, there's a much more compelling argument for, hey, plenty of European countries have high barriers to trade, and so this is about opening those up. That's not what this argument's about.
Right.
So fair point on that front, and time will tell in terms of how all of this develops. We've got to take a quick break. When we come back, full market update here during the sell-off with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person. But with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets selling off in reaction to the escalating drama surrounding President Trump's pursuit of Greenland and more threats of tariffs, resulting in increased trade tensions between the U.S. and European Union. Right now, the Dow is down 1% or 487 points lower. S&P 500 also down 1% or 72 points. NASDAQ down 1 1/3% or 309 points lower. Russell 2000 is off 1.2%. 10-year Treasury yield up 4 basis points at 4.275%, and crude oil jumping 2% higher today, trading at $60.65 a barrel. Big tech stocks, including NVIDIA and Alphabet, seeing losses on the day as investors pull back on tech as a result of global trade tensions. NVIDIA down nearly 3%, while Alphabet shares are down about 1.5%. Meanwhile, 3M reported mixed fourth quarter results this morning, beating earnings forecasts but fell short of revenue expectations. The maker of Post-it notes and Scotch tape also reported a decline in quarterly net income, weighed down by litigation costs. 3M stock is falling 5%. Elsewhere, Fifth Third Bancorp stock is up nearly 1% after it beat earnings estimates. However, the regional bank's net interest income fell short of expectations. D.R. Horton shares down almost 1% after the home builder reported stronger than expected quarterly earnings and revenue. Warner Brothers Discovery approved the new all-cash bid from Netflix. Warner stock edging lower while Netflix shares are up modestly. Speaking of Netflix, they'll report earnings after today's closing bell. In addition to United Airlines, tomorrow morning, we'll see earnings from Johnson & Johnson and Charles Schwab. I'm Tucker Silva, and that is Wall Street Watch. And remember, you can subscribe to our YouTube page where you'll find daily interviews and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
So the last few months, Paul, we've been pretty focused on this debate over affordability. It's clearly been at the front of the president's mind. While he tried to dismiss it early on, he's now focused pretty dramatically towards affordability, and that has been running the gambit, mainly on housing, but also with some new stuff in the electricity markets. There was something really interesting in the Mid-Atlantic region we covered on Friday, and Tucker, I'm going to blank on the name of the electricity provider, but a large provider that covers from Virginia through the Mid-Atlantic out to the Midwest, basically came up with a new auction scheme to allow giant tech companies to bid on electricity for the next 15 years, thereby really locking in prices and profits for those utility companies that would need to build out the capacity for that electricity. So unique way to try and solve the market. But I think, one, this is a problem today, and I pulled some stuff up so we can actually measure how significant the price problem is when it comes to electricity, because to me, it's just not good enough to say, oh, prices are up this much since 2020. We need some benchmark. And two, because of how we regulate electricity in this country and most countries around the world, not going to be an easy problem to solve. So First things first, the article from the Wall Street Journal points out that electricity costs are up about 38% on average since 2020. I decided to pull the most recent CPI data we have, which was December of 2025, and compare it to right before COVID, December 2019. So in the aggregate, since that point in time, all prices in total, as according to how the Bureau of Labor Statistics measures this, they're up about 26% in the aggregate. Electricity prices specifically up 40.5% since that December 2019 time period. So what you are experiencing on your electricity bill is not a fluke. It is a huge increase over the last 5 years and far more than what we've even experienced in terms of aggregate inflation. It dwarfs even what we've seen in terms of shelter costs. So the way that CPI measures this in terms of shelter costs, which would be a combination of rent plus owner's equivalent rent. Think of, how much you would get paid if you decided to rent out your own home is what they think of there. Shelter costs are up about 30%, electricity costs up 40%, overall prices up 26%. So clearly this is hitting the nerves of Americans for good reason. My point about how we fix it is just incredibly difficult. It takes a long time for generation projects to get off the ground and get going here.
Yeah, PGM, which is the provider for Pennsylvania, Jersey, and Maryland, but it spans more than just those three states. It's a massive part of the country in terms of electricity what they're providing. They're expecting to see demand grow about 5% on a year on average for the next decade or so. And there's a bunch of different factors, Mike, that go into this. I mean, AI data centers definitely are part of the story here. We've covered that on the show before in terms of who foots the bill when you're looking at the big hyperscalers of Amazon and Google and Microsoft. There's certain parts of the country that have been really dramatically impacted by the data center build out. Northern Virginia is a power alley. You've got out in Oregon some areas there too. But also there's just some issues with the grid more generally speaking. For a significant period of time, there was nowhere near a significant amount of power demand growth. If you study back over a 20 or 25-year period, the demand that we're seeing recently, a lot of it does point to AI, the recent demand that we've seen, far pales in comparison to the growth that we had seen for the last 20, 25 years. And that's why there hadn't been much discussion about the grid or electricity in general. But now we do sit at sort of this tipping point where these price increases are becoming so tenuous that there's going to be, I feel, a lot of political action here. And you wonder how that impacts the data center build out. Do they start to shift some of this burden to these hyperscalers? How do you go about doing that? And then you have all the whole deal of how do you upgrade the grid seamlessly, because it's a very fragmented market, the electricity market. It's not some, nationally regulated thing. Each area has their own sort of jurisdiction. So it's a lot to unpack in what is a very complicated sort of mechanism that powers the whole country.
Yeah, this is a interesting. If you listen to the show enough, you hear me constantly talking about how free markets will solve the problem, and here free markets would hypothetically solve this problem, but in the most disastrous way you can imagine, right? I mean, the reason that electricity prices are going up is because Google, Facebook, and other giant tech companies want and need electricity in order to run their AI models, and so if you completely deregulate and allow markets to handle this, then we'll all be paying a lot more for electricity, and some people won't be able to afford to, and you have terrible things like people rationing electricity or, freezing and having real problems there. So this is one of those instances where the free markets, the results of the free markets would be so disastrous that we're not willing to go that route, and I agree, for good reason. I do just wonder, obviously we're talking about nuclear, we're talking about all sorts of other things, but will there be a conversation about rationing? One thing comes to mind, Paul, and I don't think I've discussed it with you as much, but Tucker's heard me talk about it, how I have one of those, Nest smart thermostats, right?
Sure.
And it will prompt me to say, hey, do you want to participate in this program sponsored by your utility company where we will automatically adjust the temperature in your home during peak demand and will pay you, we'll pay you basically to, give you that option where we control the temperature and you can override it. But, when we're at peak demand, we're going to turn down the temperature in your home in order to save things. And really it has to do with, cooling costs during the summer because I heat on oil. But ultimately, what they were offering was like $20 a year. And so I said, no, you're not creepily controlling my thermostat from your headquarters for $20 a year. But there's a price at which I would say yes.
Sure.
And so, there is more in terms of creative problem solving here that hypothetically could be done using free markets like that. That is a pretty free market. Hey, we're going to pay you, Mike, to sweat it out in your home in August in order to, relieve some of that demand from the grid. And if they paid me enough, I'm sure there are plenty of people who would say, okay, I'll sweat it out for a few hours this July humid day. Again, it's going to require a lot of creative problem solving, and this is not going away, right? No. This is a very clear market problem. Demand for electricity is far outstripping supply that can come online. There is only one logical result, which is prices go up. The only question is who is going to ultimately pay for those prices.
Right.
Do we subsidize? Do we hold rates for homes and then jack up rates for commercial properties? If we do it for commercial properties, does that mean that everybody from the AI company to the pizza shop ends up paying much higher electricity prices? And then how does that all get passed through to the consumer is all an excellent question. And I'm sure we will see very thoughtful, well thought out policies on this and incredibly stupid policies that end up, hurting consumers more than helping them. But it is not an issue that I think is likely to go away anytime in the next decade. Let's take a quick break. When we come back, big CEO's latest excuse for poor sales. We'll be talking about that next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
In the latest for inventive terms when your company is struggling, we have a new word that is permeating through earnings calls over the course of the last year. Choiceful is a way of describing people that don't want to buy the, pardon my language, crap that you have to sell. The term choiceful was mentioned 70 times across 43 earnings calls in 2025, according to a FactSet analysis of S&P 1500 earnings calls. That's up from 36 mentions in 2024, 27 mentions in 2023. Specifically, last May, Rick Gomez, the chief commercial officer of Target, said that consumers have been choiceful in their buying selections, in their buying decisions. Macy's CEO mentioned the same thing. You there with me, Paul? Just a complete garbage excuse for why people don't want to buy your stuff specifically?
Yeah, the longer you do this gig, the more you kind of get into the ebbs and flows of the rhythms of executives at big time companies finding unique ways to try and pin the blame elsewhere. You know, concerns about tariffs were one that people leveraged onto. There's a parallel to this in the fast food space, which is the value. Customers are looking for value deals, aka, you know, McDonald's adopting some more of these $5 offerings and defending that, hey, we're selling less, because the bottom line and the candid way they should just say it is that consumers aren't buying as much of our product and they are not spending as much. And this is just, it has its features everywhere. And I'm trying to think of some others to rack my brain, but there's always a flavor of the month that these CEOs will come in and mention on their earnings calls to try and defend any weakness in their behavior. It's oftentimes macroeconomic concerns that they really try to put an arm's length distance from, that they can't really control when they're not selling as much.
Here's what I know. According to the government's own data, the U.S. Bureau of Economic Analysis, consumers' spending via the Personal Consumption Expenditures Index is up 5.25% year over year. So what I am hearing is that people don't want to buy your stuff.
Right.
And therefore they're being choiceful, which that's fine. I mean, choiceful is just a word for they don't want my stuff. And they are, but the what you can't say about the consumer is that they aren't spending. And I guess saying choiceful, you know, to me, it insinuates that people are strapped for cash and are being really selective. Doesn't really appear so, right? They're spending a lot of money year over year. They're just choosing not to spend it with you. And so keep an eye out for that term. It doesn't seem terribly positive when describing companies right now.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands, enjoy crystal clear water and powder soft beaches, world-class dining, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today at visitusvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Wall Street Journal asks if a $1,700 espresso machine will help Walmart challenge Amazon. So I know that's a silly headline, and it is a
Mike,
silly
you're
premise.
in. You're thinking about it. I know you are. You want that
it's
espresso
like
machine.
premise to begin with.
Not that bad. Not that bad.
You're getting it for the office.
Yeah.
Thanks,
yeah,
Mike.
Every time I see a more expensive espresso maker, I usually just
Get a barista
jump
in here.
on it. Just throw the other one in the trash. But okay, here's the point about Walmart. Over the course of the last 5 years, they have done an excellent job of bringing in a higher income consumer, mainly because that higher income consumer was also feeling budget pinched and came in for cheaper groceries. And so in my mind, yeah, if you're Walmart, you might as well swing for the fences on this. Again, you don't need to stock your store with $3,000, $1,700 espresso machines. That's, I don't think, the strategy for Walmart. But I think the point would be that, hey, very suddenly you've started attracting a different demographic. And if that allows you to sell a really expensive, coffee maker that probably has a 30% markup on it, why wouldn't you?
Yeah, and they've also built up their e-commerce side of the business. They've seen pretty significant growth and investment there. So they have continued to try and fight as hard as they can against Amazon, who has just done a fantastic job of taking more online wallet share than they had previously, which was already a really significant mark. This is news to me, Mike, just quoted in this piece that their Amazon share of the U.S. furniture and home furnishings market hit 20% market share, more than double its 9% share in 2019. So just incredible, the dominance that Amazon has established over so many different areas of the spend market. But from Walmart's perspective, so you've built out the e-commerce side. I think that allows you to have a little bit more diversified options on some of these trendier items you could post on your e-commerce site. And then also you just need to recognize that you have a bifurcated market right now. We've talked about this a lot on the show. The higher end consumer, the higher income consumer, is spending more than some of its lower income peers. So branching out to make sure you're servicing those people is probably a smart move on Walmart's part.
Yeah, I'm just, I think Walmart's pretty much proven that they don't really have an Amazon problem, right? Like a bunch of other retailers do, like Macy's and Sears all had big Amazon problems and barely exist anymore. Walmart has found their way to grow and, attract consumers into their stores. And so I think what Walmart's really doing is taking a piece out of the playbook from TJX or Costco,
right,
where they're trying to find products to put in their stores that you can't really find anywhere else, and people will actually come to your store to find them. And attracting that higher end consumer, I think, is a big overall piece of this. But as far as Walmart and Amazon go, again, huge behemoth threat, but I don't know that Walmart has an Amazon problem. Quick break, a lot more to cover in the second hour of the Financial Exchange. We'll be right back.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit, and you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's two of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the elder law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome to the Financial Exchange. We've got stocks in a fairly significant sell-off, although they've rebounded a bit off their lows. The NASDAQ currently down 322 points, about 1.33%. The S&P down 85, 1.2%. Dow Jones Industrial Average matching that from a percentage basis. Yield on the 10-year Treasury moving up 0.05%, 5 basis points on presumably concerns of an increased trade war and a bit of a sell America trade this morning, following the weekend's comments from the president regarding Greenland and the United States' control of it and disagreements we are facing with the European Union. To set the table a bit on that relationship with the EU, trade between the United States and the European Union in 2024, when you total up all goods and services, totaled between $1.5 and $1.7 trillion, dwarfing any other trade bloc relationship that we have, although, debatable as to whether or not we really treat it exactly as a trade bloc, given, tariff eruptions over the course of the last 12 or 18 months or so, I guess 12 months or so. In the aggregate, I think investors have calmed to the idea of tariffs playing a bigger role in the future of the economy. Obviously, were they to increase at the pace that has been thrown out there, it would be pretty disastrous for both the European and U.S. economy. And I think for those reasons, many out there are starting to shrug this off, or at least for the day, shrugging this off until we know more about the genuine goals of the U.S., of the Trump White House, and where the line is going to be drawn by our European allies. Anything else to add on the Greenland situation, Paul, before we move on to other subjects?
No, I think you covered it.
So the other big item that's been dominating headlines over the last month or so has been affordability. And while initially dismissive of the conversations, I think it's pretty clear that those in the White House have turned their heads towards affordability and, housing affordability specifically. I find that entertaining because, frankly, of all the affordability issues, housing is the one that I think is actually going to resolve itself on its own fairly quickly, but fairly quickly might be a time scale of 3 to 4 years, and I don't think people are quite willing to wait for it. So all sorts of proposals have made their way to headlines, some from the Trump administration themselves, others from other areas, between reporters and hedge fund managers. Everyone wants to put their opinion on how you fix the housing situation. But I think one piece that I'll acknowledge here for a moment, and the Journal makes this point: to make homes affordable again, someone's going to lose.
Right.
And I think that gets overlooked quite a bit. It could be that homes are made more affordable by the means I would hope, which is a lot more building and construction, in which case you increase supply and you probably decrease the cost of homes overall in the community in which the new ones are built, right? If you own a 30-year-old home and there's a brand spanking new 2026 down the road, well, guess what? Your home might not be worth quite as much as it was before. If there's a new 1,000-unit development in North Phoenix, then the existing homes are going to take a bit of a hit. Any way that you try and improve affordability, somebody gets hurt, right? Let's say we're going to increase a new tax credit on new home buyers, which has been thrown out there by some, not directly by the Trump administration from what I've seen, but others. Well, somebody's going to have to pay for it, and we're going to run up deficits in all likelihood, or you're going to have to increase taxes in order to do so. There is no solution to fix housing that is all positive so far as I can tell. I just happen to think some of the ideas are particularly worse than others. But the three that were brought up that, I can clearly draw a line to the Trump White House. One, the idea of the 50-year mortgage has been floated. And so, what would be involved there is changing the rules for government agencies to go out and buy conforming loans. Right now, a 50-year mortgage doesn't exist, I think, in part because it's illegal, but also in part because the banks, if they issued it, would have to hold it on their books because the government agencies do not buy 50-year mortgages. So if you make it conforming, then all of a sudden banks could start writing 50-year mortgages. The only way it would happen, though, to be very clear, the only reason this would happen would be if we, as taxpayers, said, yes, we want government-funded industries buying up those mortgages from the banks so that they don't have to hold them on their balance sheet. So don't think that just by waving a pen and saying, yes, 50-year mortgages, that those would just happen. Banks don't want 50-year mortgages.
No way.
They're only willing to issue them because they can sell them back to the United States government.
Exactly. Even if you look at the 30-year market today, that's dominated by Fannie Mae and Freddie Mac backing a lot of them, or serving as a guarantee as a government-sponsored enterprise behind them. And so the same effort would need to apply with a 50-year one. And there's also just a lot of pitfalls on a consumer perspective with having a 50-year mortgage. It's similar to when you go to a car dealership and they ask you what you want for a monthly payment. Yeah, if you can stretch a car loan over 10 or 15 years, you can get a pretty low monthly payment, but that's not really truly the cost of owning the vehicle over time.
Interest over the course
exactly.
of that decade.
And the same thing applies even in a much more dramatic fashion, right? When you're talking about a house that is far more expensive than that vehicle, and you're talking about most home buyers today sitting between 35 to 40 years old, buying a 50-year mortgage, taking them out to age 90. That's a lot of interest being paid. Mike, a question for you. You had mentioned before when we kind of kicked off the segment, in 3 to 4 years, you think the housing market will resolve itself. I get the idea, maybe the premise of supply and demand and sort of the letting the markets dictate this, but I'm just not so sure I could be as confident that things will get resolved here in the next 3 to 4 years. I'm not saying there's any, Armageddon awful situation with the housing market, but hard to find a real supply catalyst, at least on my side of things, when I look at the housing market over that period of time.
So I guess it depends depends on what we mean by, fixed or in a better place. My argument would be that 3 to 4 years ago, I think home affordability across the country on average, when you compare it to inflation-adjusted incomes, is about where we were in the late 2010s. That would be my argument, is that by, let's call it 2030, when you look at inflation-adjusted incomes compared to average or median home prices, you're going to be able to see a ratio there that is pretty close to what we were seeing in the late 2010s. And that's entirely because you are seeing mortgage rates that haven't moved and more supply coming online. The problem is we're not seeing any of it here in the Northeast. And so, when we talk about our own personal experiences with housing, if you live in the Midwest or here in the Northeast, I don't know that we're getting to a, quote, fixed housing market anytime in the next decade, but that's not how we measure things. Like, I know we tend to be a little bit centric to where we live, but in the aggregate, that's how I'm thinking about this and how I'm measuring it. Is every month you're seeing more supplies of homes come on. More people can't afford them at these prices. And so the longer they sit on there, the more price cuts you're going to get. And eventually this is a situation that just kind of resolves itself as far as I'm concerned. But the other policies that are being tossed out there, and again, I won't be shocked if some combination of these does go into effect, because it's a pretty good thing to run on. The idea of banning corporate buyers, right? So, hey, we're not going to let big hedge funds or family offices or pension funds go and buy single family homes. I guess practically speaking, it might reduce competition for homes and therefore bring down prices. One, I don't know, maybe you can, but I don't know how you would limit a company's ability to buy a single family home without, infringing on some of those companies' constitutional rights. So questions about that. Two, corporate ownership in single family homes is pretty small.
It's not that big.
It's not going to make a huge difference right away. Three, as much as I hate to say it, if we didn't have those giant corporate buyers back in 2010, then a lot more people would have been out underwater on their homes and would have had probably a much longer recovery from that financial crisis than we ended up having.
Right.
So I don't know that we're having another, home crisis or mortgage crisis anytime in the near future, but be prepared for that implication if we get one, because those giant institutional buyers, I understand why you might hate them, but they did
provide some liquidity.
Provided liquidity in a really ugly housing market. Third one there was, lowering interest rates through bond buying. And I think there's a clear positive result there. The question becomes, are we as, taxpayers willing to fund a government agency to constantly buy bonds and lower interest rates? Because that'll have some, again, you might be able to lower interest rates temporarily, but that will have some longer term effects here in terms of inflation. The other ideas that I've seen thrown out that I think are just interesting, one was, tax credits for buyers. Again, I don't know why we seem to propose things without talking about the deficit effect of all of this. And to be clear, if we issued new tax credits for home buyers, then there's going to be a bigger deficit. The most interesting one that I've seen to me, because you don't have to raise taxes, you don't really have to change much other than regulations, would be allowing banks to issue mortgages with prepayment penalties.
Okay.
Again, I find that interesting because it's just financial maneuvering. You don't need to fund some new government agency. You don't need to do anything other than change a regulation. It would come with some obvious downsides. Obviously, if you took one of those mortgages because you can't prepay that mortgage, and if you sell your home 5 years in because you get a new job, then you've got a stiff penalty to pay. But probably would incentivize banks to offer lower mortgage rates. I'm just not sure by how much. So interesting thought exercise that I'd been put through on the prepayment penalty idea.
The other unintended consequence, though, from some of these ideas, Mike, is that you bring more buyers onto the market by adjusting these policies, and then that in turn
brings up home prices.
Exactly. So when all these solutions are targeted sort of on the buyer side of things, but none really dealing with supply, and I get it, it's really fractionalized in terms of local markets and real estate construction. But when you do some of these things, if you do them on a broad base, that can be the unintended consequence. If mortgage rates right now, a magic wand, it came down to 3.5% or 4% hypothetically, me sitting at 2.75, all of a sudden I'm game. I'm back on the market, and I'm not the only one. There's going to be, millions of other people in that similar boat. So all of a sudden, the home in the Northeast or wherever is going to see an uptick because you've got a lot more buyers to the table. So it's a very difficult problem to solve, and I don't really pin it all on the administration. It's nice that they're going after some solutions, but it's supply and demand that you have to mess with there.
Quick break. When we come back, a little bit of trivia next on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. On this day in 1841, China ceded Hong Kong Island to Britain during the First Opium War. So our trivia question today, what year did control of Hong Kong revert back to China? Once again, what year did control of Hong Kong revert back to China? Be the 5th person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the 5th correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Is it embarrassing that my first source of context for that is a Rush Hour movie?
No.
It's a little embarrassing. Like, I immediately, when I thought of this, is like, I think they covered that in that Rush Hour movie.
Which one, the first or the second? Or the third?
I think it's, it wasn't the first.
I don't remember the reference. And I know those movies well.
Yeah. In any case, we can move on from Rush Hour or Hong Kong because the Supreme Court is meeting this week, and we won't hear their decision for 6 months. But it'll be a pretty high-profile hearing this week for anyone in financial circles, and Jay Powell made a splash in it this morning, too, that's worth mentioning. But the test for Fed independence is going to be in the spotlight this week as Lisa Cook heads to the U.S. Supreme Court to fight her termination for cause by President Trump. So I think some context is important here, but Lisa Cook is a Fed governor. Generally speaking, they're appointed for, I think it's 12-year terms, and generally speaking, it's been theorized that the president really cannot remove these individuals without cause. Mm-hmm. And there's a big debate now about precisely what constitutes cause, but Lisa Cook has been fighting this through minor courts and finally is being heard by the Supreme Court. She's being investigated for mortgage fraud. She has not been charged with anything. It's being alleged that she may have declared 2 properties as her primary residence, whether intentionally or somebody else did it on her behalf. Regardless, that is the allegation, is that she declared more than one property to be her primary residence in order to get lower mortgage rates. she has not been charged with a crime, and the president is attempting to remove her. And so ultimately, the Supreme Court is not going to rule on whether or not she deserves to be charged with a crime. They don't know. Facts haven't been presented. That's not what this is about. It's entirely going to focus on what is cause when it comes to removal for somebody from this Federal Reserve. And look, we won't know the results of this for months. It's going to take quite some time to work through the Supreme Court and then a lot longer to be announced. And I'm really not sure which direction it goes, because in one regard, clearly the Supreme Court has deferred to the White House when it comes to the removal of a lot of key people at a lot of government agencies. At the same time, they have dropped several hints to the Trump White House that they view the Federal Reserve differently than those other government agencies.
Right.
And so I genuinely am not sure which direction this goes in. But one thing that I found really fascinating and stirring the pot, Jay Powell, who last Sunday, 2 Sundays ago, came out and posted a video to X in no uncertain terms, calling out President Trump and the White House for attempting to influence Fed policy, and has put himself really on this collision course with the Trump White House, has decided that he will be attending the hearing in person. And that is, so CNBC reported this, a few others did as well. One, very irregular, right? Generally speaking, the head of the Federal Reserve wouldn't attend a Supreme Court hearing, and for him to do so, presumably kind of in defense for Fed independence and Lisa Cook, is very interesting, and once again sets up this kind of antagonism between himself and the president, who disagree on all of this. Suffice to say, a lot of people have, a lot of vested interest in this. I personally think that Fed independence is absolutely crucial. Others very clearly disagree with me and think that the president should have the ability to dictate policy. I've thrown out there why I don't think that's a good idea. But this will be a real test from the Supreme Court in terms of that independence and whether or not, really whether or not it has any teeth. Because if you can remove somebody for allegations of a crime, you can kind of remove anybody, is my take on that. Let's take a quick break. When we come back, we're going to have a full market update with Wall Street Watch and your trivia winner next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the timeshare Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in sell-off mode in reaction to the escalating drama surrounding President Trump's pursuit of Greenland and more threats of tariffs, resulting in increased trade tensions between the U.S. and European Union. Right now, the Dow is off 1.1% or 556 points lower. S&P 500 also down 1.1%. NASDAQ down 1.33% or 307 points lower. Russell 2000 off about 0.5% now. 10-year Treasury yield up 5 basis points at 4.283%, and crude oil up over 1.5%, trading at $60.41 a barrel. Big tech stocks, including Nvidia and Alphabet, seeing losses on the day as investors pull back on tech as a result of those trade tensions. Nvidia down nearly 3%, while Alphabet shares are down nearly 1%. Meanwhile, 3M reported mixed fourth quarter results, beating earnings forecasts but fell short of revenue expectations. The maker of Post-it notes and Scotch tape also reported a decline in quarterly net income weighed down by litigation costs. 3M stock now down by 8%. Elsewhere, Fifth Third Bancorp stock is up nearly 1% after it beat earnings estimates. However, the regional bank's Net interest income fell short of expectations. D.R. Horton shares down about 0.5% after the home builder reported stronger than expected quarterly earnings and revenue. Warner Brothers Discovery approved the new all-cash bid from Netflix. Both of those stocks are little changed. And speaking of Netflix, they'll report fourth quarter earnings after today's closing bell, in addition to United Airlines. Tomorrow morning, we'll see earnings from Johnson & Johnson and Charles Schwab. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what year did control of Hong Kong revert back to China? That'll be 1997. Brian from Quincy, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Brian. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
So, Paul, outside of the radio show, I think everyone listening is probably aware, but if they're not, then worth mentioning that you and I spend the rest of our days focused on safeguarding client assets and helping them manage their finances and, personal financial planning. And increasingly, a larger part of our day job has been focused on spotting and detecting scams and convincing those that we work with to not participate in them. And some of this stuff is pretty easy to spot and detect, and others have become more complex. But the Times has a piece out today, How to Prevent Aging Parents and Relatives from Making Financial Mistakes. And to be clear, granted, I see all of it across our entire company, but I see probably no fewer than 3 to 5 accounts of identity theft or, access to bank accounts or, false charges on credit cards. Our clients tell us about those things quite frequently. I see no fewer than 3 to 5 of those every single week coming through. And less frequently than that, though, we will field calls from people who are clearly being scammed into trying to send money away and trying to kind of sort through what that could be, detect whether or not it's a scam, and try to prevent those monies from leaving is an increasing part of this job. I think, frankly, we just saw like 2 of them in the last week where tens, if not hundreds of thousands of dollars were attempting to be siphoned off of older people's investment accounts. This really runs the gambit, but any personal experience you can share from that, Paul, in terms of what we are seeing on a day-to-day basis as somebody who works in this industry?
It's really significant, Mike. The uptick that I've seen, particularly over the last 3 to 5 years, it feels like that it is just so frequent that we're running into a range of different scams, whether it be text message scams to people on their cell phones, on unpaid tolls or unpaid other liabilities out there. On the financial side, on the wealth management front, you have solicitors out there trying to utilize buzzwords like crypto or artificial intelligence to generate these schemes that will divert money out of seniors' pockets into their bank accounts and then promise them a tremendous return only to have the rug yanked out from under them. So this is something that personally it has just really caught my eye in terms of how much this has seen an uptick in terms of our day-to-day business. It is really different than from where it was 10, 15 years ago when I started in the industry. It's just much more frequent now, and as a result of that, it's on us as advisors and everyone out there listening to just be hypersensitive and hyper aware and potentially to have people in your corner too. I know finances can be a taboo subject and not often comfortable sharing with family members, but it's really important to have someone that you can reach out to discuss these things if you find yourself in a precarious situation.
Yeah. I mean, there's a little bit of good news. I mean, in my experience, banks were pretty bad at this a decade ago, and they have gotten a little better over the last few years at detecting this stuff and preventing it from happening. The bad news is they're not improving nearly as quickly as the scammers are. Just the pace at which that is evolving is frightening. The tips that I have, though, when I run across this and when I speak with people for like, hey, how do I go and safeguard this? It's tough. Honestly, like obviously you tell them what's the latest thing, how to detect a scam, how to look for certain language or not trust certain emails. But it evolves so quickly that in my experience, the only real way to prevent it is to genuinely ask a ton of questions and slow things way down for people that need their money, right? It's about throwing roadblocks up there every single time somebody walks into the bank or walks into their institution requesting funds, because you have to assume that, 1 in 10 of them might be falling for something that you would have previously thought they wouldn't fall for. That's obviously more difficult when the institution that you're walking into doesn't know you personally. That's what I've seen over and over again. But again, they're getting better at some of those places. I think, when I'm dealing with family members who are older and potentially susceptible to that, the first question I ask is, hey, if something were to happen, does that bank or does that investment company have my contact information so that they can bounce it off of me?
Sure.
Right? Like, am I listed on the account in some way so that I can help out if that comes to pass? Because that's kind of the easiest thing to have in place, is a trusted person that's right on there that can help out with those things. Suffice to say, if you're not already aware of how big of a problem this is, make yourself aware. And if you have loved ones who are retired, and by the way, that does not mean that they have to be 89 years old. I have seen this happen to smart, intelligent 60-year-olds. If you have people who are retired, if you have people that are not getting the training that you probably do in the workforce every day on all sorts of scam detection stuff, please get involved. Help out and learn a little bit more. Armstrong Advisory Group has a guide on this exact subject, actually, on preventing fraud and detecting scams. You can call for the copy of it at 800-393-4001. But I'm begging you, really stay informed on what you can do to help prevent this sort of thing, because hundreds of millions of dollars are being lost to fraud every year, and it can truly devastate people's financial future. Again, if you have questions on the subject and you want to learn more, call the Armstrong Advisory Group. We're happy to chat about this. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Allison Schrager from Bloomberg has maybe the title of an article of the week. Go ahead and resent boomers, but for the right reasons. She's getting at some, perceived fight that's existed for decades between millennials and baby boomers. And she points out that it's really not about the right things. And I think one point that she makes that is salient. If you're going to get upset about boomers, it shouldn't be about the fact that they made a bunch of money in the stock market or bought homes at a cheaper price. If there's one thing that you can look at the last generation of politics and blame a group for, it would be the idea of leaving behind massive amounts of debt, cutting taxes without cutting spending, and running up the deficit. Like, that to me is one thing that I think you can put squarely at the feet of, people that have been involved in politics for the last 30 years and will absolutely be something that next generations have to reckon with. But all the stuff that I heard about is more about, like, hey, how can we freeze rent or build more housing or get rid of student debt? And all of which, again, I think are fun and exciting to talk about, but none of which fix the underlying problem that really we are being strapped with, which is a massive deficit that won't necessarily need to be repaid at some point, but is clearly leading to problems such as our Social Security benefits, nearly running out, Medicare being unfunded, and all sorts of problems that we're having to deal with in the real world, inflation being another one. So I'm with Allison on this one. Stop fighting amongst ourselves about stupid things that don't matter, and actually focus on the ones that do, like the fact that we have, ran our deficit to levels that nobody would have ever possibly guessed at, while demanding that, we still get all the entitlements that we feel entitled to.
Yeah, as the Social Security Administration depletes its coffers in the next 6 or 7 years, here.
Yeah, instead, let's fight about how cheap it was to buy your home in 1970.
Right.
Great. Awesome. Quick break. When we come back, bit of Stack Roulette is next.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. From the other law attorneys at Cushing & Dolan, Here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
Stronger, more powerful.
we have each other.
When we come together and go red,
The more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all 3 and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visit usvi.com. That's visit usvi.com.
Time for a bit of stack roulette here, Paul. Plenty to pick from. What do you have for us?
Mike, AI answering systems are saving the day for New England pizzerias, but customers aren't so sure. This article here from the Boston Globe covers a regional New England pizza chain that has incorporated the use of AI assistants for taking in those tedious phone calls that they get to their pizza stores all across the area. So this is specifically covering Crust Pizza. It's one of the many small restaurants across New England that is taking and fielding calls through the use of AI in order to try and just take care of the missed out revenue on phone calls that they can't catch, and also just to try and improve their efficiency and productivity. Some of the customers a little frustrated with the experience where they've run into situations where they can just never get to a human in that situation that gets to a high escalation. But if you read the piece here in terms of the accuracy from these AI receptionists, and again, this is coming from Lomain, which is the company that's behind the AI assistant, claims that the system has a 98.6% accuracy rate and that human receptionists generate a score of around 94% in accuracy in data entry, according to some research that was done. So a fascinating thing. I toggle back and forth, Mike, every single day on this whole AI story. Is it a situation where this technology is going to lead to a slew of productivity enhancements and revenue growth opportunity? Or is it something that is being overstated and is really just going to be a tool that gradually helps businesses? And stories like this were at least interesting to note because the feedback from the business owner was pretty overwhelmingly positive in terms of the revenue growth that they saw in the use of this AI assistant for their pizza chains here.
Oh, I'm sure this is huge. I mean, for these individual businesses that can onboard it, you think about how busy they probably are on a Friday night. I know I always order stuff online, but occasionally I'll call in a pizza order, and yeah, I'm sure they get absolutely swamped, and this does help. I think a few things can be true at once. I do bet that the AI system is pretty darn good at taking pizza orders.
Yep.
I'd also be willing to bet that it's frustrating if you have an issue and you literally can't talk to a human being. It's also safe to say that if all AI does is wipe out a bunch of close to minimum wage jobs that are taking phone orders for pizzas, it's not going to pay for itself. Like it needs to do a lot more impressive stuff than eliminate a job that you pay $15 an hour for.
Yeah, no, that's a very fair point. It's that lower hanging fruit probably is going to be the earliest adoption of it, and the call center is probably the biggest area that you could point to as immediate improvements are being seen on that front. But like you said, does that transform the way businesses operate? No, not necessarily the case. It has to create systems that automate much more sophisticated procedures than just taking a pizza order. But nonetheless, interesting to hear a New England chain picking up the technology and utilizing it, and then also sort of trumpeting its benefits. And also it's probably helped by the fact that it seems like, and it's mentioned in this piece here, online ordering is just becoming more and more prevalent. I think the days of calling in for a pizza order, and I still skew that way sometimes too. Maybe it's being out in suburbia, you don't mind, a quick phone call and driving over. It does
Paul's
seem
just
like,
lonely.
Or maybe I want to escape the house for a little bit. Take a drive around.
Just as boxes of pizzas stacking up.
Clear my head. It's actually funny you say that because I was dying to leave the house this weekend to drive somewhere. I wasn't lonely. I had a lot of company with 3 sick kids and a sick wife, and she kept getting DoorDash, and I was furious that I didn't get the opportunity to go out to the bagel place get the breakfast sandwich myself. I'm like, what? It got delivered here? I was supposed to go out and get that.
All right, here is my biggest bone to pick with these, because Tucker's heard me talk about this before, but I had to call a plumber a few weeks ago, called it up, and I got a good 30 to 40 seconds through the conversation before I realized I was speaking with an AI agent. Mm-hmm. That right there is my biggest problem. I do not mind talking to this AI agent was fantastic. I didn't notice it until 30 to 45 seconds in. I only noticed it because it was doing very computer-like things, like confirming what I had just said back in its own language. So it was very clearly a computer that I just didn't notice for a little while. It booked my appointment. It confirmed my appointment via text message. Like, everything that it did was perfectly fine. The problem was that you didn't identify it as such. In fact, you tried to deceive me into thinking it's a person because you said, hey, it's Josh from yada, yada, yada. How can I help you? You intentionally had the sounds of a call center going on in the background. So there are other voices talking in the background, all of which was intended to make me feel as though I was talking to a human being when I very clearly wasn't. Whereas if you had just said, hey, this is Josh, an automated AI system from XYZ, I would have gladly, talked to that AI system and booked the appointment. Instead, I was left feeling like I was kind of deceived or tricked into something. And so I think that's a problem. I think the other problem that's explained in this one is when it does get screwed up, you need to have a path to actually be able to talk to a human being. Otherwise, people are going to get really, really upset. Markets remain open and in negative territory here as we close out the show. The NASDAQ leading the way down, nearly off 1.5%, but S&P and Dow all off more than 1%. We'll be back at it tomorrow with a full recap. Have a great rest of your day, folks, and tune in then.
This is a message for